Good day, everyone. My name is Ted Gardner. I'm one of the portfolio managers on Westwood Salient's Energy Infrastructure team. Today, we are just going to walk through the July returns as well as discuss what we might see under different administrations as we move closer to the election. So starting first with returns, solid returns for the midstream space with AM&A leading the way up 3.8%, bringing the year-to-date total to 20.5%. AMEI, which is the mutual fund benchmark, was up 3% for the month and is up 22.5% year-to-date. And then the AMZ, which is the MLP only benchmark, was up 60 basis points and up 18.4% year-to-date. So lagging both from a month and year-to-date perspective. So turning to the broader energy space, starting with crude oil, it was down 4.5% for the month and is actually up 8.7% for the year. And as we look at some of the ETFs above, particularly the E&P ETF, which is XOP, and the services ETF, OIH, we see that those year-to-date returns are pretty similar to crude oil, which is not entirely unexpected, given the fact that their free cash flows are much more tied to the price of oil, as well as the price of gas, but more so on the oil side. Natural gas got hit again pretty hard, 21.7% for the month. Year-to-date, it's down 19%, but the global LNG prices have held in a lot better. The JKM market, Japan, Korea, was only down 90 basis points for the month, while the European prices, using the Dutch marker, was up 5.1%. Both of those are actually up 8.7% for the year. So most of the natural gas problems are domestic at this point. As we look at the different categories within the space for the month, we see Canadians leading on average for the month of July up 5.2%, and that was led by TC Energy, which is up 13%. And what we see generally with the Canadians is they tend to trade a little bit more with interest rates than the US space, because they trade a bit more like utilities in Canada, and B, they tend to be more highly levered, at least the big ones like TC Energy and Enbridge. So as rates come down, you see a little bit of uplift from that financial leverage. On the US side, C Corps were up 1.7% on average. We did have some strong returns from Kinder Morgan, which is up 7.8%, and DT Midstream up 6.1%. Both of those are natural gas pipeline companies, and we've talked about the AI theme and needing more natural gas throughout the rest of the decade. So we do believe those stocks have benefited from that trade. On the downside, NEP was down 7.6%, and Equitrans was down 4.3%. That the acquisition by EQT did close during July, and that weakness before it closed was more than likely due to natural gas prices falling as much as they did. MLPs were up 1.3%. CQP led the way with up 7.2%. That is Cheniere's MLP, which just consists of the Sabine Pass liquefaction plant, which is just a fee-based facility. So it did well for the month. And then Plains up 3.6% and Western Midstream up 3%. Sunoco was down 2.9% following the closing of that NuStar acquisition. We think that weighed a bit on it. And then Genesis and USAC were both down 1 to 1.5%. Year to date, we've seen the C Corps outperform on average, up 23.9%, led by TRGP or Targa, up almost 60%, and then DT Midstream up 40.8%. Again, on the downside, we had only one negative C Corp, and that is the Next Era Partners, which was down almost 11% for the year. MLPs are up 14.5% on average, led by Western up 46.3%. Then Plains up 27%, and Genesis up 24.7%. And then on the downside, we've only had two names that have been negative for the year, and that is Cross America Partners, which is a bit non-traditional. They're a wholesale fuel MLP, what we used to call gas station MLPs, and then Sunoco down 5.6% for the year. Canadians for the year, on average, have lagged the space. And on average, they're up 18.7%. That's led by Keyera, which has actually outperformed the benchmark at 25.1%. And then we see AltaGas and Pembina basically in line with the index. And then we've got Enbridge, Gibson, and TRP that have been behind, although they have had positive returns for the year-to-date period. Turning to the election, we've been getting a lot of questions lately, as you can imagine. Does it matter who wins? Will we see any legislative or regulatory changes as we move forward? So we wanted to just kind of break this into a few different parts, starting with traditional energy, which would be oil, gas, coal, pipelines, et cetera. And as you guys know, you've heard us talking really for the last 3 years about capital discipline, returning capital to shareholders, focusing on returns, et cetera. And we do not think that's going to change regardless of who comes in, regardless of Trump's drill baby drill approach. So we just don't really see that changing. And I'll show you something interesting in just a moment. We do think that Trump could very well renew the sanctions against Iran, but with the excess capacity that we have in other OPEC countries, we think that would be offset, or could be offset, particularly with productions from Saudi Arabia and the UAE. And then as we talk about fracking, if you recall back in 2020, when Harris was running for president on her own, she did talk about banning fracking, et cetera. We haven't heard any of that lately, and we do continue to believe that it's highly unlikely that she would ban fracking. On the renewable side, we would certainly expect Harris to continue to support for renewables. We generally see that from the Democratic Party, that they are more about decarbonization and renewables. Trump, not a big fan, so he does not support the IRA. And we think that he might attempt to overturn all or part of the IRA, particularly if there's a Republican sweep where they control both houses of Congress. Either way, we believe that permitting reform is necessary, particularly after we saw the Supreme Court overturn the Chevron deference. As we look at reform, we think we might see it happen a little bit quicker and maybe be a bit more widespread, meaning including the pipelines, electricity lines, et cetera, as opposed to just renewables, if we were under a Republican administration in Congress. And I mentioned a moment ago about the capital discipline that's been in the space. So I thought this was pretty interesting as we ran these volatility numbers. What we're looking at here is the difference in volatility between the XOP and the S&P 500, as well as the AMNA versus the S&P 500 over time. And the punchline is that since they've changed their focus from production growth or dividend growth in our space to returns on capital, free cash flow generation, returning capital to shareholders, we have seen that volatility come in versus the S&P 500. So for context, as we look at this 10-year period, volatility on the S&P 500 has been 15.9%. On average, during that period, the XOP has traded 24% higher, so a 40 vol space on average. Now, there have been obviously some big blips in there in the 2015-16 timeframe. You can see that a little more clearly on the AMNA graph. But during COVID, we saw a blowout in volatility as well. But even then, it's about a 20% increase over the S&P 500. So their efforts to focus on free cash flow generation has resulted in a much lower relative volatility. So right now it's trading around a 20 vol, which is a 7.9% spread to the S&P 500. Even more so on the AMNA, it's always been a bit, or quite a bit less volatile, frankly, than the XOP, as you would expect, since there's not the direct commodity sensitivity. But right now we're actually trading at a slightly lower volatility than what we see in the S&P 500. So it is slight at 65 basis points. The average throughout the whole period is 7.4%, so closer to a 20 vol during that period. And then the average, excluding those blowouts, has been closer to 4. But might have heard us talk over the years that we expected this type of development as we focused on free cash flow generation, because it just, everything's more stable. Dividends are safer than they've ever been, et cetera. So thankfully, we are starting to see some of that come to fruition. Thank you for your time today. If you have any further questions, please contact your Westwood representative.